We're going to talk now about an entrepreneur that we came across on the mlenow.ca network who was bankrupt in their past and was looking for financing. And so they weren't looking for equity, they were looking for a loan. They thought that maybe they could, that a bank would lend to them based on the strength of their idea, even though their credit wasn't in place and they didn't have any net worth. Unfortunately, their bankruptcy was a series of poor decisions and unfortunate events, but nevertheless, they came through mlenow.ca looking for financing, and because they didn't have any net worth, because their credit was really poor, we couldn't put them in a debt option. Banks, it's important to know, banks don't want to own your business. They really don't. They're in the business of lending money. So they borrow money from people at a usually at a low cost, and then they turn around and lend that money out. So their upside, the amount of profit that they can make, is limited by their interest rate. As a result, they're not interested in investing in your business if you don't have any money in the business. And even if you have a great idea, they still can't lend you the money because they need something to lend against. They need assets, or they need security, or they need some way to realize that value out of your business. And if it's only an idea, but they're paying for the equipment, and they're paying for the staff, and they're paying for marketing and websites, and they might as well just start the business themselves. So that's a really key distinction to know, that banks do not want to own and run your business. They want to make interest off of the money they lend to your business. So in this particular case, we said, look, we can't give you a debt option because there really isn't anything here to lend against. And but if you come up with a different scenario, or you come up with a different option, we'd love the opportunity to try and help you. So God bless entrepreneurs. This entrepreneur, being who she was, she went out and found a business that said, look, we've run this business for 20 years, me and my wife. We'd really like to get out of the business, but we're not eager to get out of the business. So you seem like somebody that has some history, and even though maybe in your past you went bankrupt and life didn't work out for you, we feel more comfortable lending to you because of those things that had happened to you, because now if they happen again, you already know what to expect. We know what we have in working with you. So tell you what, we'll go and borrow some money against the business to cash out, to put some money in our jeans, and we will allow you to pay us the rest of the money in the future. And before you take any profit out of the business, and before we give you full ownership and control, the loan that we get from the bank, the payments will have to be made out of the revenue of the business before you get a percentage of the profit. And so in this particular case, we were able to give some guidance to the vendors and to the purchaser to say, here's probably how a deal comes together. It's very typical for private enterprises or for private businesses to structure their deals this way, where someone says, look, I want to buy your business, and the owner will say, great, let's go to the bank, let's get some money from them, we'll keep a little bit of money in so you can pay us later, and then you put some money in. So it kind of works out to be the bank will give a third of the money, the current owner will keep a third of the money in the business to be paid out at a later time, and then the new owner will come in with a third of the purchase price, and between all of those thirds, they end up having a business transaction. So it's important to remember that the banks don't want to take all the risk. In this particular case with this entrepreneur, even though they had a bad track record, financially speaking, they were still able to put a deal together where they could get the business that they wanted. It was going to have a cost to it, so they were going to have to pay some interest on some money that the bank was going to lend in, but ultimately they were able to achieve what they wanted to achieve. And so if you're a business owner out there who maybe has had a bit of a scarred past, the beauty of being an entrepreneur is to simply seek out opportunity. And if you yourself can't borrow the money or access the cash that you need to start the business that you want to start, then maybe you have to take a different road and find a business that's already operating that you can earn your way into or work your way into. And often you might find that that option was a better option all along. And so if you need money to finance that, and you have a business that's willing to sell you their business but maybe not require all of the money, then a lot of times you can borrow against that, and go to mlenow.ca because we'd be happy to help you with that.